Welcome to Tax Smarts Unlocked, the podcast for individuals and small business owners looking to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services, each episode is packed with insightful advice on proactive tax planning to help you navigate the complexities of tax laws. Here's your host, David Robson.
Hello, and welcome to another episode of Tax Smarts Unlocked. I'm your host, David Robson, and today we're diving headfirst into a topic that's increasingly relevant in our digital age: tax planning for e-commerce businesses. Whether you're selling handmade crafts on Etsy or running a thriving store on Amazon, understanding the tax landscape can be daunting, yet absolutely crucial for your financial health. Today, we'll unravel some of this complexity and equip you with strategies to maximize your deductions and minimize your tax liability. So, let's get started. First, let's set the stage with an overview of the current tax landscape for e-commerce businesses. Over the past few years, the realm of e-commerce has exploded, bringing with it a host of unique tax challenges. As an e-commerce business owner, you're likely dealing with various states' tax laws, particularly concerning sales tax. This is because physical storefronts govern taxation based on their physical location, but e-commerce transcends these boundaries, making tax implications more complex. Furthermore, the IRS has increased its scrutiny on online businesses, especially regarding income reporting and deductions, making it crucial for business owners to be proactive in their tax planning. Now, you might wonder, why is proactive tax planning essential in the e-commerce sector? Simply put, effective tax planning can save you a significant amount of money while ensuring compliance with tax laws. It's about strategizing throughout the year, not just scrambling at the last minute before the tax deadline. This approach allows you not only to maximize your deductions, but also to make informed financial decisions that will benefit your business in the long run. Speaking of deductions, what are some common tax deductions available to e-commerce businesses? Some major deduction opportunities include the cost of goods sold, which is the cost incurred to produce or purchase the products you sell. Then there's shipping expenses, both inbound and outbound. Marketing costs from digital advertising to promotional materials are also deductible. Additionally, home office expenses can be significant if you're running your business from home. But remember to adhere to the IRS's guidelines on calculating and claiming this deduction. Effective tracking and categorizing of business expenses is imperative. It's not enough to make a purchase. You need to know exactly what you spent and why. Leveraging accounting software to track expenses and categorize them accurately will streamline the deduction process and help avoid trouble in case of audits. Doing so also gives you a clearer financial picture of your business, aiding in better decision-making. Now let's delve into special considerations for sales tax and online transactions. Due to the South Dakota v. Wayfair ruling, state sales tax laws have evolved, and online sellers must now collect sales tax in states where they have substantial business, even without a physical presence. Ensure you understand the sales tax obligations in every state where you have customers and keep accurate records of all your sales. Another consideration is the use of third-party platforms like Amazon or Etsy. These platforms often handle certain taxes, such as sales tax, on your behalf, but that doesn't negate your tax responsibilities. You still need to report all income accurately. Additionally, some fees they charge may be deductible. For instance, the fulfillment and storage fees on Amazon could be categorized under property rentals or service expenses for tax purposes. Let's illustrate these strategies with a real-world case study. Consider Jenny, an Etsy shop owner who sells custom jewelry. Initially, Jenny was unaware of the deductible nature of her marketing expenses and shipping costs. By consulting with a tax planner, she learned to track her spending meticulously, keeping receipts and categorizing her purchases. In her first organized tax year, Jenny managed to claim these expenses, which significantly reduced her tax liability. This proactive approach not only increased her net income, but also allowed her to reinvest in her business expansion. While it's crucial to focus on strategies, it's equally important to highlight common pitfalls e-commerce entrepreneurs face during the tax season. One major error is underreporting income due to the false assumption that online sales are somehow less visible to tax authorities. Reporting all earnings accurately is fundamental. Another pitfall is the failure to consider inventory properly. Keeping an accurate inventory count and its value can inform not only your tax deductions, but also your entire business's financial strategy. Year-round tax planning is advisable versus last-minute strategies. When you plan ahead, you can make insightful decisions that align with your business objectives. Regularly set aside time to assess your financial situation, update your records, and review tax implications of any business changes. This methodical approach ensures you're not caught off guard when tax season arrives, and adjustments, if needed, are minor rather than major last-minute overhauls. Remember, while DIY tax preparation software can be a great tool, its generic nature means it might not capture all specific nuances of your business's tax needs. Consulting with a professional tax preparer or planner can provide you with tailored advice and optimization strategies that are specific to your business operations. This personal attention ensures you're not only complying with tax regulations, but also taking full advantage of every possible deduction and credit. We've covered quite a bit today, from understanding the tax landscape for e-commerce businesses to discussing practical strategies to maximize deductions. We've also looked at the importance of proactive planning, sales tax considerations, and the impact of third-party platforms. Real-world examples like Jenny's underscore the financial benefits of strategic tax planning. Remember, taxes don't have to be terrifying. With the right approach, you can transform them from a dreaded chore into a crucial component of your business strategy. If today's discussion resonated with you, or you think professional advice could further benefit your business, don't hesitate to seek expert guidance. We hope we've unlocked some tax potential today. Thanks for tuning in to Tax Smarts Unlocked. Until next time, keep strategizing smartly and paying less tax legally. Goodbye.
Thank you for joining us on Tax Smarts Unlocked, the ultimate podcast for individuals and small business owners ready to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services. Each episode has been carefully crafted to provide you with insightful advice on proactive tax planning. By adopting a smarter tax approach, you can focus on what you do best, growing your wealth and your business. We're here to guide you every step of the way. Don't miss an episode. Subscribe to Tax Smarts Unlocked on your favorite podcast platform and unlock the secrets to confident tax planning. Remember, it's time to take control of your taxes and unleash your full financial potential.